Hello everybody and welcome back to the channel. We're taking a look at markets for the week ahead as we do every Sunday, and I wanted to jump right in because there's so much stuff to talk about right now. Markets are, in my opinion, at like peak interest ever. Things are chaotic, things are crazy, and you guys are looking for some ideas. So let's jump right in. Okay, so the S&P 500. This is a chart that we're going to take a look at today. And you might say, I don't trade the S&P 500, Nick. Let me skip this and go to the other currencies. Well, don't skip this because what you're looking at impacts all of us. Literally all of us who are trading should be paying attention to this chart. And let me tell you why. If this thing is going down, risk sentiment is poor, meaning that people don't want to buy risky assets. And if you're a currency trader, what does that mean? That means currencies like AUD, NZD, CAD. Because if the world was ending, would you rather hold these currencies or would you rather hold USD, JPY, right? The big ones, right? Knowing this at the start of your analysis is very key because if you know that this thing is bearish and likely headed lower, you might be very careful to trade assets like this on the long side. Anyways, let's take a look at that and then we'll compare it against some currency pairs. The S&P 500 last week was a really tough market to watch. It was just down, down, down. And every rally on this thing seems to get sold right on into. And last thing I wanted to say about the end of the week last week, look at this candle. This is very interesting. If you take a look at this previous candle, we had a really ugly day. We took out the lows, but key thing to remember here is that we went under the lows, but we closed above. We in fact had kind of a bullish day. And I think that this candle right here has a lot to say about what we might expect going into this week. Let me show you this. The 4-hour chart is a little bit cleaner. You can see we dropped real big. This looked really ugly. My goodness, man, it was like every stock under the sun was red. In fact, let's take a look at my stocks. I'll show you where we ended up last week. This is the stocks that I own, and you can see still mostly red with a couple stocks entering into the green territory. Either ways, stocks were down really bad, and then they ended up coming strong back. There is argument right now that this could be potentially due to some options expiration dates coming up. If you're unfamiliar with that, basically options have expiration dates, and there is arguments for potentially some manipulation, some attempt to try and rally those the market back to close out above strike prices, things like that. But anyways, regardless of the point, there was a bit of a pump there right on the Friday close to try and hopefully save the end of the week. Why that matters is that I think that we may see a bit of a risk on swing this week. And that is just my opinion based on what we saw on the end of the week Friday. And what I mean by risk on swing is stocks themselves could be due for a bit of a rally, a bit of a relief rally. If we scroll out here, look at the daily chart. If you take a look at these markets, right, you have these big sell-offs followed by rallies, big sell-offs followed by rallies, right? These are often called relief rallies. And a lot of times in even a bearish market, you get environments where there's a bit of a relief rally or an attempt to try and suck back in the buyers and that sort of thing. Now, if this happens, there may be some good call to look for some profit-taking opportunities if you have longs or maybe you want to get out of some stuff, etc. But I think that if we rally this week, we have a good chance to go to the very least right around here at 41.20. And then potentially, if we can break through that, maybe we even see a move back up to 4,300. Regardless, that's going to be my bias going into the week. I think that we are going to be risk-on oriented as we are quite oversold and we had a nice Friday close. Now, as we go into some currency pairs, what could that mean? Well, let's go take a look at some ones that stick out to me. Some of you guys know pound yen, or you trade pound yen regularly. Pound yen is what I would call a pretty quintessential example of a risk-on currency. You can see that usually when the stock market's falling, so is the pound yen. Now, when I said just now that I think that there's potentially a risk-on rally coming on, that is where I'm saying risk-on assets as a whole, regardless of the stock market, could also benefit. We've got some levels of resistance to watch. And pairs like pound yen, if we can get breakouts similar to what we're talking about on the S&P, there may be some excellent opportunities to try and catch the rebound, if you will, and maybe trade this thing back up to recent structure levels that we could look at for potential targets, right? And that is using the macro whole market as itself, right? You're looking at the stock market to see risk sentiment and trying to make a judgment call. But let's go look at some individual factors and see if there's any other things that match up our criteria on the Edge Finder. So this is our tool, the A1 Edge Finder. It's our scanning tool that we use every week to find setups. So here is something that really sticks out to me. EuroCAD, we would consider generally a risk-off pair, meaning if you buy it, you think the markets are fearful, because what we've seen, at least in recent history, the euro tends to outpace the Canadian dollar during a fearful market. So when I look at this, tied with my idea of potentially a risk-on swing, we could potentially look to sell EuroCAD this week, which I've been trying to do. I've had a couple profitable trades on it recently, but we'll go take a look at EuroCAD because this is a pair that lines up heavy. It has a strong sell reading on the A1 Edge Finder, which is, again, our tool. You can see in many categories, it has a red banner basically telling us that it is leaning bearish. So, for example, if we were to go look at EuroCAD here for a second, what we're looking at when we go look at EuroCAD here is we are looking for essentially factors to stack up in one directional favor. So if I take a look at the Euro Canadian dollar, you can see that this pair sticks out to me as a potential trade, specifically strong sell in the interest rate divergence section. The Canadian dollar has a higher interest rate, which is attractive for investors. Unemployment is better in Canada. Inflation, better in Canada. GDP growth, better in Canada. Trend reading, right? We have a mixed trend here, but still technically sort of a downtrend. Seasonality, the month of May is historically negative for this currency pair. We've tracked that and studied seasonality within our studies to put this into the tool. Risk sentiment, retail sentiment. The crowd is long on this pair, so that's going to lean us towards the short side. It gives us a strong sell reading. All good. Let's go take a look at the chart. Okay, so EuroCAD, where can we watch for this thing this week? Well, last week we had a retest of the 50% retracement level, and there was a nice reaction there. But towards the end of the week, we had a little bit of mixed sentiment. So for me, I'm watching for potentially a retest of that area and maybe, just maybe, a bit of a poke up into this region here. Okay, so if we can poke just back up into that area, I may look to try again to sell this pair. And the idea here is that if risk-on swings come back into the market, it will be interesting to see if the Euro Canadian dollar can catch a little bit of a swing to the downside. In terms of targets, we double bottom down here. Let me actually make this green so that we can know that this is kind of a target idea. Okay, so in terms of where this thing could go, right? Let's use this short position. Let's say that price comes up into our region again and we get a chance to sell this. Okay, I kind of like the idea of putting a stop around 50 pips, just shy above the 61.8% retracement. You have a pretty good distance in terms of where things could go. Now, to be fair, we do have some higher lows. I can already hear, Nick, but there's higher lows. Don't buy that or don't sell that thing, right? Well, remember that even in downward trends, there's counter trends, right? For example, all of this would be considered a counter trend because you had a major trend to the downside, and then you had this minor uptrend, right? So we're seeing a bit of a counter trend happening here, but overall, the trend is still down in my book, so we're looking for potential sells. So as we come up into this area this week, I would say that we're basically looking for a break underneath this and basically looking for a stepping stool back down. So I do like that as a potential short this week. That is a trade setup that I will be watching for myself. If we can pop up into the 50% retracement, I may look to sell the EuroCAD in favor of a potential risk-on move in markets. That's also going to be dependent on the oil price, which of course the Canadian dollar is heavily correlated to. So we'll keep tabs on the oil price as well. Let's go back to the chart for a second and see if we can find anything else that suits us. So I know a lot of you guys look at gold. Let's go take a look at gold. So looking at gold here, I am still, from a technical analysis perspective, still bearish on gold. So if we take a look here, you got gold potentially coming up into this. I think that looks like a 50% retracement. Let's see. Nope, 61.8. I had that wrong. So if price pops up into the 61.8% retracement here, there is potential, I would say, for sellers to get a hold of it and maybe push gold back down. We've been bearish on gold for several factors, but one of the biggest ones has just been the Fed's real strength on raising rates, right? They're talking about raising rates 50 basis points until they need to stop, right? And that has potentially a lot of bearish pressure on gold as people will basically buy the dollar. They'll be in the dollar. That strengthens the USD. We've talked about the dollar for I don't know how many hours on this channel now, but it does not help the gold bullish perspective. Now, we have seen a little bit of a rally here on gold, and I'd say that maybe you get a little bit more pop here to the upside. I would just be careful once we enter the 61.8, because I think at that point you've got key resistance, you've got a sell pattern, and if we go back and look at the edge finder, we'll pull this up just so you can get a reading on what our metrics are telling us about gold. By the way, while that loads, remember that you can get the Edge Finder for 40% off. The sale is ending right now, so if you would like a copy of the tool, get it down below in the description. There's a 40% off code. You just punch that promo code in at checkout, and you'll get the software that we are developing here for a super discounted rate. So check it out down below. Okay, so here's gold, right? And gold has a -3, so it does have a sell category or sell reading overall. And the reasoning here for it, let's go through it. So COT data is actually kind of bullish for gold, but so is the dollar. As I mentioned, the Fed being very hawkish has a lot of investors leaning towards buying the US dollar, so it doesn't really get a strong bias in terms of COT data. Retail sentiment is also mixed. We see that the crowd is not really decisively one direction. They're leaning a bit more to the short side, but overall it's pretty 50-50. Seasonality. The month of May is historically pretty negative, but we have to be careful because the month of June tends to spike up just a little bit. Trend reading. The downward trend is still intact. GDP growth. GDP growth, which is right here. The U.S. has negative GDP growth in the last quarter, so that is actually a positive thing for gold, at least according to our tests. Basically, GDP growth being negative could lean towards people being fearful and buying gold as like a hedge kind of thing. Inflation is let's see, inflation right here actually was decreasing, so fears about inflation could be subsiding a little bit. We'll see. That's still we had that inflation number recently, which was it did come down, but not as much down as they were expecting, which is of course not a great thing either. Unemployment gets to 0. Interest rate is positive in the U.S., so that's not super bullish for gold. So anyways, all those things combined, we have a sell reading. So if we go take a look at the chart again one more time, we are looking predominantly for sells using the tool. So I would say this area looks pretty good. You've got a nice technical downward trend and looking for pullbacks within that trend. Okay, so let's take a look at the pound USD. So the pound dollar is going to be very interesting in relation to what we talked about with the pound yen. In the short term, I think that the pound dollar has some upside. Okay, so going off of what we discussed in terms of risk on versus risk off, right now I think that in the short term we have potential for some risk on rallies here. In terms of where we could go on the pound dollar, it's really going to be interesting to see because you actually have a lot of potential upside here for the pound USD. If you take a look at where we could go, you can see when we fell really hard. So we have these major gaps basically that the price may try to attempt to go through. So if we get up into this area and let's say we break out, right, we could go right on up to this area. And if we were to break out of this, we could shoot right back up to the previous high. So let's not get ahead of ourselves though. Perhaps we'll talk about that more in the live stream this week. The thing that I like here is that we do kind of have a little bit of a trend directional change. We had a higher low. Things look, potentially very loosely optimistic for the pound going into this week. Now, you have to be very careful because the pound is very much a risk-on asset. It tends to do well when markets are optimistic. When they're pessimistic, this thing tends to kind of fall apart. Which is what we've seen in recent times. So if you're looking at the pound USD, one thing I would watch for is to see if we can break this zone, right? This was kind of our barrier last week. If we can get through this area, let's say we're able to pop outside of this, then you're looking at potentially some good trade setups in my opinion. So if you're looking at the pound dollar, I would wait for some sort of break of this structure that we failed to get past last week, and then looking for any sort of retest for good risk reward trading opportunities. That would be my personal opinion. So we have a kind of a key structure here, right? So we could mark this as support. In terms of like risk to reward, right? So let's say I'm looking at this, I'm saying, okay, well, I could put my stop just below structure here. And let's say I'm, targeting a level like this. Personally, I like to trail stop. So if I was to take a trade on the long side, what I would probably do is I would loosely look to try and trail stops once we get to about 1-to-1. So what I like to do is, like I said, so like let's say I got this trade and let's say it started moving in my favor. Once we got away from my initial entry by about 1R, I would usually move my stop loss to about break even just to lock in the trade. Then from there, if we hit targets, we continue to break out, that's where I'm just going to follow price action with a trailing stop. So that's how I personally approach it, but I understand that not everybody does that. So they like to think of target ideas. That's why I tend to draw them. So here and here in terms of targets. And that's where I'm saying I think you get some good risk reward on these trade ideas if we see a pop. The key component is if we see a strong start to the week, any sort of hesitation, impatience, and pullback in that could be an opportunity to look for more upside on the pound dollar. Again, I think that we have been quite oversold. We saw some good candles here on the long side. So looking for follow through this week, I think that the pound USD looks kind of an interesting candidate in terms of it is a bit counter trend in the sense that we do still have a lot of downward structure here. But if you understand what you're looking for and you're understanding that we have seen some signs of reversal, the risk to reward on a reversal can be quite excellent. So it's not a super high probability trade per se, but it has a huge potential upside. I mean, this trade right here, that's a 4.5R. And all you're talking about is a big breakout here and some risk on this week to get us up to that. You could risk 100 to make 450. That's not bad. Of course, do your own trading. I'm just sharing my personal thoughts and opinions here. But yeah, I like pound dollar long, and that might be one that's on my watch list. So a lot of pound pairs this week with a slight bullish bias for me. Just another curious one would be pound Swiss. This one has gotten really beat up, and the Swiss franc actually came back pretty strong this past week. So again, my favorite leans towards looking for breakouts on pound yen, looking for breakouts on pound dollar, and potential sells on gold. Let's see, what else can we find? Let's go back to the scanner here for a second. Any buys that we could look out for? The UK 100 is looking really strong. That might actually be interesting. German 30, the DAX here looking really strong. USD try, I don't usually trade the exotics, so I'd probably leave that one off. But yeah, CAD Swiss was one that I was super bullish on, but it kind of fell apart with the Swiss franc coming in so strong. So not a whole lot of buys that I'm really interested in, mostly on the sell side. Remember, get the Edge Finder for 40% off. The link is down below in the description. And if you would like to try it for free, I'll pin a comment so that you can send a message to one of our team members here at A1 Trading. Our software team has a couple people that help people try it out, so we'll give you a free demo. If you would like to try it out, there will be a pinned comment down below that you can send a message to try it out. So with that said, thank you guys for watching today's video. If you enjoyed, make sure to hit the thumbs up button, subscribe if you're new, and we will see you back next time. See ya.